Hey folks, welcome back to this edition of Ben's Bits. We're continuing our series from last week's video about how your capital is having to play catch up because of your investments. And remember, we're looking at this through the lens of retirement and preparing for it. Now here's a bold statement alert. Let's face it, the traditional 401k is dead. Now, most Americans consider themselves savvy investors because they get involved with big names of mutual funds, because they sound like they're going to produce significant returns. As I'm sure you know, 401ks were introduced in the late 70s to supplement income during the retirement years, to support Social Security, pensions, things of that nature. But that landscape has changed over time. However, people are still using the same outdated models and strategies that were back in the 70s and the early 80s. And there are some nefarious people out there who are capitalizing on people's ignorance. So as I'm sure you also know, traditional 401ks have fees attached to it, and they lay in the shadows. Things like legal, trustee, transactional, stewardship, bookkeeping, finder's fees, just to name a few. And we've heard of some studies stating that people, they don't even know what their 401ks are, or 401k fees are, and what it's truly costing them. You know, we've discussed this before in that the more capital that is taken or removed instead of out there working, it has to be replenished. And that takes not only more capital, but it takes time to replenish as well. Now, I'm not saying that 401ks don't have their place, but the traditional way of looking at them isn't helping your bottom line when it comes to retirement and properly planning for it. The reason we believe notes should be the most utilized asset within a retirement portfolio is because there's a tangible asset that's associated with it, and it helps protect your hard work, and it offers more security because it isn't really connected to mutual funds and what everyone else is doing in the market. And we're fans of the market. But I'm going to be very candid. Notes aren't manipulated like the market is and by what others are doing and what these big corporations are doing. At the end of the day, we believe it's the safest, most secure investment in the investing realm because it offers the best of both worlds, the liquidity of the stock market and the tangible physical asset of real estate without all the headaches that are associated with traditional investing. You have to ask yourself the following questions. What does your future look like? How detailed is it? Or rather, how likely are you to hit that specific goal? That's why we spend so much time looking to the future, because if you don't plan for it, as the expression goes, you can't attain what you can't measure, right? So you need to start planning now for your future, because reality will smack you in the face if you're caught off guard by it. And you can't build retirement overnight. And you certainly don't want to be blindsided by it. You have to build a strong foundation that can withstand the storms, going through daily life, dealing with all the things that life throws at you. And you can overcome anything if you properly plan for it. And you should be able to live without the added pressures of outliving that account, which is a real threat. People are living longer nowadays. And that's why it's so important to consistently be looking at your retirement and fostering a healthy portfolio that's in line with what matters most to you, with strategies that complement what your goals are. And if you're eliminating having to replenish your losses, then you can grow that much faster. So that's it for this edition of Ben's Bits. Join us next week. And as always, thanks for watching, and we'll see you next time.